What's up, everybody? It's Jeff Beers from the 40 Finance channel. I am officially back. I was off on a 4 or 5 month hiatus. I do a lot of work in digital marketing, and I had a big assignment during the football season. Now that's done. I got some big plans for 2020 right here on this channel. I invested in a new office, studio space. Hopefully the production quality improves ever so slightly. And today I've got my 2020 stock market outlook, just telling you guys where I see things. I'm not a professional analyst. Always check with your financial advisor before you make investments. But let's jump into my take on 2020. All right, so the first thing I want to call out on 2019 is I don't think the gains were really as good as the headlines. You know, you see a lot of plus 20%, a lot of plus 30% even when people talk about 2019. But the fact of the matter is we were in such a hole since September of 2018 that you really had to go quite a ways of not making anything before you saw any gains. So if you take a look at this chart here that I drew up, this top here is in September of 2018, and it wasn't until if you include this dip, it wasn't until about July of 2019 that you started to make some money, right? So obviously it depends on when you got in, but if you invested your first dollar, or any dollar for that matter, in September of 2018, you didn't see a nickel. In fact, you saw pretty substantial losses all the way up until July of this year. Now, since July, things have been pretty good, and riding into 2020, we are seeing new stock market highs and a lot of records being broken, which is great. But don't confuse 2019 as this banner year because of what we are really digging ourselves out of. So unless you got in on the first of the year in 2019 and started investing then, or you invest, on averages, whatnot, bottom line is 2019 ended in a good way, but a lot of it was digging out of a ditch we set for ourselves around Christmas time in 2018. All right, so looking ahead to 2020, and I think the number one thing that I'm concerned about right now is just world events, right? We talked a lot about China trade last year. There was the Brexit thing. This year we've got Iran, potential war starting there. We have a presidential election, which I think could really flip the coin on the stock market when that day comes. And it's just still some uncertainty. I wouldn't even say China trade has been locked up, right? I think that we have some rollback on embargoes and tariffs, kind of go back to the way the world was, but all the things that trade standoff represented are far from being resolved, and the way that some of those talks have went to this day, I could see them drop off very quickly and end us right back where we were. So until everything's signed, sealed, and delivered and people are shaking hands on the pulpit, I'm not putting a dollar on the China trade deal quite yet. And so the bottom line for me in regards to politics and world events, I personally believe that we will have at least one minus 10% drop or more due to a world event. So that could be anything from, Brexit going officially live and they run into problems there. That could be the presidential election that we've got here. We obviously have other things going on too. And it wouldn't take a whole lot when stocks are at their all-time high, which is where we're going to start the year, okay? It's not going to take a whole lot over a 12-month period to dip plus 10%, and that's why I'm saving my cash right now and waiting for the next opportunity to come in. I'm really not super interested in pouring money in the market right now, mostly because I believe that we are at least going to have a dip that will present a better opportunity. All right, so the next part of my outlook on the 2020 stock market is something that I've kind of been preaching for a while, and that is it's technology or bust, guys. It's technology stocks or bust. There's so many industries that are in demise right now, and it's not that they're not producing profits, right? The oil producers still are making profits. Gasoline's not going away. I agree with all that. I worry about the growth, though, in markets that are not tied to technology. So whether it's you want to get into retail, consumer goods, things that have always sort of been the safe picks, I just think that there's just going to be more and more disruption from a technology standpoint. It doesn't mean that all those industries or sectors are bad. They're not. I would just look for the technological play of that sector. And if we take a look at the chart I made here, this is basically a comparison of the S&P 500, the NASDAQ, and the Dow. The Dow is in red. On the purple bar here, you have the S&P, and the green is the NASDAQ. And to me, that just represents what we're seeing from the old way into the technology way. Now, this is a micro sample, right? This is a 12 months, so it's not the full scope of humanity or anything like that. But what you see is Dow is definitely a laggard, right? It's definitely behind. I've looked at 100 of these charts over different time frames. No matter how you slice it, technology is miles above the Dow. The S&P sits in the middle, but it's still less than the NASDAQ. And the S&P 500 is changing rapidly. I think that there's more and more companies that get added, technology companies that get added to the S&P 500 every year. So that'll probably plane out after a while. However, why don't we just skip to the top, right? Why don't we just skip to NASDAQ or QQQ and just invest where the most gains are? And that's my personal opinion, and that's where my money's going to be in most of 2020. All right, my next projection for 2020 is that consumer spending could very well sink our ship here in the United States. Consumer spending keeps us afloat. It's kept this whole run afloat. Times are pretty good right now. Minimum wage increases, salary increases, interest rates are low. But there will be a time that's going to dry up. I mean, it's all kind of funny money, as people say. And if you bought a new house when low interest rates, I think you did the right thing, assuming you have the money. But that's a loan, right? So you bought a new cell phone, you probably used a credit card, and these people were out and they're spending a lot of money on Christmas and stuff. A lot of that went through credit cards, right? So there's going to come a point where we're too leveraged as consumer base. And it doesn't necessarily mean that things will go into free fall. It just means that people, at the bare minimum, people are going to have to tighten their wallets, start to pay off some of this debt. And when they put the money towards the debt, it obviously comes out of the market. And there's a lot of stuff that can fall relatively quickly when you think about consumer spending areas like entertainment, restaurants, subscriptions to all these streaming services. There's just a lot of opportunity to cut back, and I think we're at the high of spending right now. And if there's a world event like I projected earlier, I don't think it's going to take much for people to sort of button down on their purses and cut back on their spending. All right, so bottom line, what does it mean for 2020, at least from my perspective? And at the end of the day, I think we will have a small net gain at the end of the year. I think it'll be less than 5% for most investors. And that's coming off of a time when we're at an all-time high, right? So I don't know where January has stacked up as far as from the first to, this first week or two of the year, but I'm saying that through the ebbs and flows, the ups and downs from Jan 1 to December 31st, my projection is we'll eke out a small gain under 5%. It's a bit of a dart throw. I'm not a professional, but that's my opinion. That's where I see things going. I think the world's just too unstable right now to expect anything else. So if you're doing it like me, I'm saving cash. It's a great place. It's a great time to put some money aside, see where this record high goes. And almost undoubtedly, we're going to have an opportunity to jump in and buy much lower than the prices we're seeing today. So that's it, everybody. Again, it's Jeff Beers, 40 Finance. Please like and subscribe if you can. I really appreciate your support. We'll see you next time.